Okay, good morning, good afternoon, good evening from wherever you're watching from. Welcome back, everybody, and welcome back to the channel. Today, we are going to look at the concept of supply and demand, and this is a basic concept in trading, but most of you guys find it a little difficult to trade, or when you're trading, maybe you trade it wrongly. So most of the time, you get most of your trade to be losses, or maybe even to spot the correct supply or demand zone, and that's your problem. So today, we are going to look at supply and demand. If you're here for the first time, I'm Setowas, and I'm your mentor here. I'll plead with you that you pay attention to whatever you're going to do and keep the step-by-step approach in your mind so that you also be able to get the concept I'm talking about in this particular video. So with that said, without wasting my time, let's go to the charts and let me explain some basic concept to you. Okay, when you talk of the concept of supply and demand, we all know that when you say in trading, when you say supply and demand, most people confuse it with support and resistance. When we say support and resistance, it's related to short ranges like a ball bouncing within a range. That is what we mean by support and resistance. Very simple. But in terms of supply and demand, it's about a crash, a huge crash in the market that creates supply and demand. And who crash the market? Market makers. They have huge money to push the market down or to push the market up. So we as day traders, we don't have enough money. We want to follow the footsteps of these market makers. So we spot areas where they are likely to push the market down or they are likely to crash the market down. And we also trade with them and we make some small profits out of the market. So let's see. So let's assume that the market is moving upwards. Let me change the color to green and increase this a little. Okay, so let's assume the market is moving upwards. So up move, retrace, up move, retrace, up move, retrace, up move. Then all of a sudden, there was a big crash down. This zone now becomes our supply zone. Why? Because the market was on an uptrend, but somehow, some guy somewhere, or an institution trader somewhere, or a market maker somewhere crashed the market down. So we mark this zone as our supply zone. And for you not to get confused, today we are going to look at only supply zones. Okay, we're going to look at only supply zones. Don't trade the two of them together if you're a beginner, because sometimes you get confused. Your eyes should be able to spot supply zones easily. Then when you become good with it, then you also go the reverse, because the supply is a reverse of demand. So looking at the only one way for this video. So assuming that this is now our supply zone, then what do we do as traders? We mark the zone and we extend our lines. All what we have to do is that we have to be patient and wait until the market hits that zone again. So let's say that maybe somehow, fortunately, the market came back over a long period of time to hit that zone again. Now, since there was a footprint here, we also assume and we join the trend and we also assume and take the market down because people are also watching. Professional traders are also watching the same zone. So if you want to trade as a professional trader, then you mark important zones, you mark footprints of huge traders or market makers and you trade with them. So this zone now becomes our zone where we want to sell and we sell with them and we make some small profit out of the market. So supply zone, we want areas where there was a big crash in the market. You get it? Let me give one more scenario. With another scenario, assuming that market moves up, retrace, is as if it's trending, as if it's ranging, but somehow, you will see that there will be a news event, or maybe there will be some information that will crash the market. So at this zone, the market had a huge spiking crash down, then begin to retrace and now begin to trend downwards. Now we mark this zone as our supply zone because it's a very important zone. So what we do as traders is that we wait for the market to somehow one day come back to touch this zone again And since it's a very important zone, we also assume that people are also watching it. So we join it and we send our trading down and we get some profit out of the market. That is simple for supply zone. So now, how do you trade this on the chart? Let's go to the chart and let me explain to you. But before we go, guys, if you are here for the first time, then subscribe to my channel. If you are my old subscriber, then just hit the like button to just push the video through to motivate me to do more videos, okay? If you've done that, then thank you. Have you done that? Have you subscribed? Okay, let's move to the chat and let me show you real examples. Okay, so when you open your Forex charts, the question is how do you spot good supply zones on the chart? Most of you guys, when we do the technical analysis on the board, you understand it better, but when you come to the charts, it looks different. So open your eyes. What you have to do is you have to scroll back in time. Now you can see today is 16th August, right? Today is Friday. So if you want to spot good supply zones, we are looking for areas in the market where there was a huge crash, where the market was already trending and then trending upwards, and all of a sudden there was a crash down. That zone, as I explained, is the supply zone. So let's go through our chart and see if you can spot some of those zones. Okay, so let's see this area for instance. See this area, you could see that the market was trending upwards. Then all of a sudden, there was a crash because this is not a retracement, this is a crash. So this zone becomes a supply zone. The next question we ask ourselves as traders is that, is this supply zone valid? Is it valid? For us to know whether it's valid, we must now trace back to see if it is not an effect of one supply zone, which is happening currently. Maybe we want to know whether it's a fresh supply zone, because we need to use this line only once. So now we spotted the supply zone. For us to check whether it's valid, we go back in time to see if there's no other supply zone which was there. You could see that though market was rotating around, but it's not an immediate supply. Assuming it was around this zone, assuming it was here, then we could say that this was the reaction of that. So since it's not there, you could say that this supply zone is still valid. So we mark our time, we mark our line here, we mark it here, and then we wait until one day if market good. If market come to touch this line again, you see that the market touch this line, and now that's where we sell. So we sell downwards. We sell downwards. So if you are selling, you enter somewhere and you take profit somewhere down here, and then you make some profit out of the market. Very simple. But in this scenario, we wouldn't have sold because there is no confirmation. After you spot your supply zone and you confirm it's a valid supply zone, you also wait for a tail. We have something we call kangaroo tail, which most of you guys call it pin bar. So there is no pin bar here. So though the market went in our favor, we would have made some profits after our supply zone, but we couldn't have entered here because there is no pin bar confirmation. So one, spot your supply zone. Two, confirm if it's a good supply zone. Three, wait for pin bar confirmation. Now let's go back. So let me clean this so that it doesn't confuse you. So this one was a win, but still we wouldn't have taken the trade because there was no pin bar confirmation. Let's go back in time and see areas where there was huge crash. Okay, and if you want to spot it well, because some people, when there's a small retracement, they think it's a crash and they enter and it doesn't work. Like for instance, here is not a crash, here is a retracement. See the line, here is a retracement. This zone is not a crash, so you cannot use this zone as a supply zone. You get the difference? You cannot use this zone as a supply zone. If not, it will not work. You're looking for areas where the market was trending and all of a sudden the market reversed and there was a crash. So let's see. Crash, crash, crash. Let's go to H1. We are on the H1 now. It's better most of the time you trade on H1, okay? Because H1 is more stronger than the M15 and the M1. If you're trading support and resistance, it's better you trade on H1, okay? So areas where there was a crash in the market, crash, crash. We have to backtest and see them, and then now we draw our line. You can see this is a huge crash. There was a huge crash. You can see that the market was trending upwards, and then there was a crash. So with this crash, we now determine that here is our supply zone. Now we have to confirm, Is this supply zone valid? If it's valid, that line shouldn't have touched another supply zone previously. So you go back and see, this line did not touch any supply zone previously. Assuming it was here, they would have noticed that this was the effect of that one. But since it's not there, then we can use this one, which means this line is still valid. Our line is valid. So now we draw the line and then we wait for the market to play. Now it's backtesting. The market has already played, but the market has not already played. You will not see all these ones here. You only see this crash. So after you draw a line, now you wait until one day the market comes back to touch this line. If you are fortunate, the market comes back to touch this line, and then it gives you a pin bar. Good. That's when you enter your trade. So you could see that here there was a pin bar here. Can you see a pin bar? So now our trade confirmation is valid. So what do? We enter our sell immediately after the pin bar close. We take our profits 1:2, our stop loss, a small stop loss, and then so which means if you are risking $100, then you must make $200. If you're risking $200, you must make $400. It's 1:2 risk reward. And then just very simple, guys, very simple. You take your profit and you're out of the market. So the ability to spot the crash is where the trick is. Okay, it's not small retracement, but huge crash. Let's see another example. So this is the one we just did. Let me mark it down. Let's backtest again and see. This was the second scenario I showed you. You could see that the market was trending upwards. Then all of a sudden there was an event, either news event or something, and the market crashed. So this zone also becomes our immediate our supply zone. So what do? For us to confirm if it's valid, we draw our line and then we see if there was any immediate supply zone. No, there's no immediate supply zone around, so which means this line is valid. So we leave it. Now, if the market has not already played and is playing, we could see that one day if the market come back, touch and give us pin bar, let's see if the market was able to touch, give us pin bar, then we take our trade. The line is still at the top here, which means the market is far from this line. So the market might not even have touched. Good, the market is about to touch. Can you see, guys? Watch out. So you see, if you see the pin bar, see, that's the pin bar. Can you see this confirmation pattern? So what do? You enter your sell. Let's see if it would have been a winning trade. Let's see. After the pin bar close, you enter your sell, your stop loss behind the pattern, and then you take your profit. So 1:2. Let's see if it would have been a winning trade. So let's see. Yes, winning trade because you can see that the market would have hit here 1:2 risk reward, and then we would have made our profits before the market extend. Can you see? Yes, that's 1:2 risk reward. So it have been a winning trade. So always wait for the pin bar confirmation and then you take. So this one would have been our winning trade, not here. Don't watch here, it's here. But the market would have logged you out around this zone. Okay, so it would have been a winning trade. Trading supply and demand is very easy, but your ability to spot where the zone is, that is what you're going to make profit with. Okay, so always spot the zone, spot the crash, confirm the zone, and wait for pin bar confirmation. Okay, let's look for other examples. Another crash. Good. You could see this also another example. So the market was moving upwards, then all of a sudden there was a crash downwards. So you could see that this is scenario 2, right? Second scenario here becomes our supply zone. Now let's confirm if it's valid. We draw our line here and let's see if there was an immediate supply zone. No, none of the lines are touching. There's no supply zone around. So we could see that this line is valid. So assuming the market has not played and we are playing, we go and when one day the market comes to touch, if only the market touches, then we take the trade. The market does not touch, we don't take any trade. So let's see. No, the market is not touching, so we do not take any trade. Or is it touching? No confirmation, nothing. So we won't take this trade. Good. You see, there was no pin bar here, so we wouldn't have taken any trade. Although the market came back to touch, there's no pin bar. So you see, there's no confirmation pattern. If you have taken this trade, you would have lost. The same supply zone now became a support. Can you see? But we would have taken this trade here because there's no pin bar confirmation. So always the rule is that make sure that you get confirmation before you take the trade. This trading strategy is not 100%. There is no strategy which is 100%, but at least if you're able to take this with 1:2 risk reward, you can get about 60%, 65% win rate, 70% win rate. And it's easy because all you have to do is to mark your line and put a trading alert. How do you put trading alerts on MT5? Let's say this is our line. We want anytime the market comes to touch that line, the system should signal us. So You just put, you right click, go to trading, and then you put alert. When you put alert there, anytime the market comes and reach that zone, it will signal you either on your smartphone or on your system for you to hear that the market has reached your zone. Now you just go and watch, and if it meets your criteria, you enter your trade. Very simple. So you can get about 3 or 4 lines you're waiting for, and get about 5 lines on your chart. Quality ones that you're always waiting for. You can draw that. It shouldn't be too much, at least 5 lines. You draw 5 support lines. You do for areas where there are supply zones. Then you draw your lines and you wait. You set alarms or you set alerts there. And anytime the market reach there, you get alert and you go and watch. If it meets your criteria, and then you take the trade. Very simple. So you have to be patient for the market to touch your line. As a trader, you must have several strategies because it's not every day the market is going to give you only one pattern. You must have several strategies you're going to trade as a trader so they can become profitable and you can get more trades to trade. Okay. So with that saying, I think that was all for this video. And after watching this video, if you don't go to your charts and you don't go and practice, then you have not done anything, right? So after watching this video, you need to open your charts and begin to see if you can spot those crashes and see how you can backtest and make some profits when you are trading. Okay, but before then, you can trade it on demo account to see how it will feel about it. And if you like it, then you continue to trade because this is very easy. Just that it doesn't happen every time. But if you draw your lines, it surprise you that within every 2 or 3 days or every week, you can get one supply zone to trade, which can also become make it become profitable by the end of the week. Okay, so that was all for this video. I'm Seto Watch, your mentor. If you enjoyed the video so far, don't forget to hit the subscribe button and maybe hit the like button and just help to put the video through. Okay, until then, take care of yourself and see you next time.